name is Gianni Kovacevic, the founder, largest shareholder, and CEO of CopperBank. And we're going to talk today about our business, which is optionality, exploration, royalties, and compelling blue sky exploration for a portfolio of copper development projects. Important to read this forward-looking statement. You can do that at your own leisure. And if you look at our share price over 5 years, it's had an effect of doubling or tripling in a very short period of time when we saw an appreciation in the copper price. You can see the green arrows here. Most importantly, all the financings we've done internally have been done above the market without warrants. Of course, me and my group have been self-financing the strategy. So you should not anticipate any kind of warrant issues with our company. So some important metrics. You should be fixated with one number and one number only. My market cap at 6 cents per share is 18 million. That's an important figure. The previous market cap high of everything I own in the portfolio was 300 million. If you look at the amount of money that's been spent drilling, we have 320,000 meters of drilling in the portfolio. It would cost about 120 million US or 160 million Canadian. That is a 20 or 10 bagger, depending on the metric you want to use. This we will call our baseline. Current market cap, 18 million. What does the business mean? We've had the most intensive insider buying of, I believe, any listed company in Canada. I don't just come here year after year waiting for the copper price to appreciate, but while we're building the business, I buy my stock because it's cheap. I think that it's a compelling value proposition for any investor that wants to have management, owner, operator exposure to copper development projects. We have 4 businesses. They're each worth something. I will show you what these businesses are worth. But in the picture of your mind, if I was to spin out all of them into independent companies, what would they be worth? I will suggest to you that it's more than the sum of the parts. We're hypersensitive to that. So 4 different businesses, I'll walk you through what they are in the back end of the presentation. Commodities are cheap, stocks are expensive. Everyone knows that. You've all seen this chart. Who cares? Well, eventually it will matter. And it will be these people that don't have exposure to commodities that are going to move the needle for investors like you and I. And it's my rule number 1 of speculating in commodities. Very simple. Running out of a commodity does not matter until it matters. And then it matters a lot. It's called a shortage. And at a low price of any commodity in general, eventually you have this appreciation. Arthur Schopenhauer once said 200 years ago, don't be fixated on what everyone's looking at. Be fixated on what they're looking at but they don't understand. And of course it's the copper in all of these deluxe forms of energy, the way it's created, transferred, and utilized. The enabler is copper and aluminum. So we know that these people are not invested in copper and gold. This is family office money. Less than 2% of their capital is in the sector. That will come in later, I think. And will they invest in junior mining? That's the question. I think they will. But junior mining is a tough business. So I have a very complicated graphic here. Junior mining financing explained. Forgive the busyness of the graphic, but this is basically how I describe it. Dilution is incessant and it's never ending. And it's the warrants and this 30, 40, 50% that you, me as a shareholder, that we suffer. So I'll make it very simple what we do at CopperBank. I can talk about all the different parts of the business, but more importantly, in the year 2020, our dilution to maintain my portfolio is 3%. I have some one-time costs this year, but 2021, the dilution to maintain the CopperBank portfolio will be 2%. That's it. That's very important. We don't like dilution. So we're going to contemplate our financing for our 2020 property payments. You could see all of my financings on the red circle, or green circles, have been done above market with no warrant. So it's going to be pretty difficult to acquire a position in CopperBank right now at 6 cents, I would think. But if you're interested and you're an accredited investor, the financing that we may do, we're contemplating it. I'm not saying it's happening imminently, but if we were to do it, come to my booth, 539, and I'll walk you through how that could play out for you. So this is our reserves and resources, various projects. You have to look at the disclosure on our presentation, very important. But if you look at the pounds in the ground equivalent, the number is 12 billion. So if we look at the past transactions, they're 3 to 4 cents. So 12 billion pounds copper equivalent times 1 penny, 120 million. 2 pennies, 240 million. It's another metric for what the potential of the stock is. And the one I like the most is the net present value. So Contact and Copper Creek each have an economic study. At $3 copper, they're not exactly economic, marginal. But every 25 cents that the copper price goes higher, we gain $300 million of net present value. So at $3.50 copper, assuming I never issue a share again, it's worth $4 per share. If we capture 10% of that net present value, that would imply 40 cents a share. That's a pretty binary outcome. Small move in copper, huge amount of torque on a per pound basis or on a net NPV per share basis. So why does copper go past 350? Our model is contingent and it shows the optionality if that works. Rio Tinto told CESCO last year that as we electrify the global economy, we need approximately as much copper in the next 25 years as was installed in the last 500. Now, they could be off by a power of magnitude. I believe that the demand for copper is going to be 2 or 3 or 4% CAGR every year for the rest of your life. There's no substitute. It's aluminum or copper, and copper is cheap. It won't be graphene, it won't be something else. That's a good number. This compounds, and in about 25 years, the demand of copper will double yet again. Glencore has done the arithmetic for us. Don't be confused at the data here. What I'm looking at are the two numbers. 2000 to 2018, in the biggest commodity boom cycle that we've ever known, the copper mining industry delivered 2.6% growth. What we need for the medium scenario in the future of energy is a demand growth of 3.6%. It almost guarantees, it's an assurance that copper prices end up somewhere in the top right of this box. But all we need, my strategy, is contingent on copper going to about $3.50 a pound, because then we get that torque per share. It goes to $4 a pound per share of net present value before we optimize the projects. That is a tremendous amount of torque, and once again, what kills this strategy is needless dilution. 3% this year, 2% next year. So as I finish my presentation off, Brent is here somewhere in the back. Is Brent here? Oh, hey, Brent, how are you? We're contrarians. We got 4 businesses. The royalty option in our company would be worth around $200 million at $3.30 copper. We're going to spin that off. And then for drilling, the 2 big trends in Arizona happen here. The trend that goes to Resolution Ray Globe and the other trend that goes through Morenci, Safford, right through our project, within a kilometer. The highest concentration of breccia pipes in North America occur right here. This is where we want to drill for future resources. 1 billion tons, 8 billion pounds of copper. Our Nevada project, and we would drill here where you have 1 to 10% copper outcropping at surface. So, if anyone can guess where this picture was taken, Brent and I co-keynoted a conference about a year ago. You win a prize. Who can guess the city? Medellin, bingo, you win. Full card winner. I'm at my booth, 539. Let's talk more copper. Let's talk CopperBank and come buy a book. They're $10. Tomorrow, I'm doing a 45-minute deluxe presentation on energy. We'll see you tomorrow.